How's it going, everybody? It's Stas here. Hope you all had a great weekend and didn't miss me too much, because today we're going to break down the game plan for this upcoming week. Stocks I'm looking at, charts I'm looking at, what I'm looking out for when it comes down to the overall markets, and much more. So sit back, relax, take a sip of your coffee, smash that like button if you guys find value, and check out my Patreon down below if you want all my buys, sells, call outs, plus more. That's linked down below, and let's get right into the video. So last week was not a great week for the stock market. The S&P just on Friday went down 0.8%, and so did the Dow for that matter, and the NASDAQ 100. And we're seeing a bit of a snapback as of now in the futures market. We have the Dow, the S&P, and the NASDAQ futures all up between 0.2, 0.3%, which does make sense considering, like I said, Friday was a pretty drastic red day overall. And you guys can see here on the 4-hour chart for SPY, we're trading right around that 180 moving average, which has been support over the past couple of months. Pretty much ever since the beginning of February, you guys can see we've been pulling back, bouncing on that 180 SMA and hitting all-time highs. So I'm looking to see if buyers step in right around here, 445, 446 on SPY, whether it's tomorrow, some point this week. I'm looking to see if that's what ends up happening. And by the looks of it, again, the futures market being up right now, who knows? This could end up translating into the pre-market session tomorrow, and we could end up having a green day. But you guys know, or at least most of you should know at this point, just because the futures market is green on Sunday night doesn't mean it's going to be green on Monday morning. So keep that in mind. These could easily, in terms of the futures, they could easily flip-flop, and we could end up going down a lot more. Who knows? It's definitely possible. Again, with the futures now being up roughly 0.2, 0.3%, and I'm currently filming this video a little bit before 7 p.m. on the East Coast here. And this week is super important for the markets, guys. We're getting the CPI number for August, and that comes out on Tuesday at 8 a.m. Eastern. Is it 8 a.m. or is it 8:30? That might have been a typo on my end, because typically it's 8:30. But either way, it's coming out in the morning, pre-market, on Tuesday, and this is going to be such a critical number. Now, we know at this point that the Fed is looking to taper its bond purchases, and in my opinion, and you guys will probably agree with this, it's, I just dropped my phone over there. It's very, very reliant in terms of these bond purchases being tapered. It's reliant on the CPI number. If we get hotter than expected inflation, the taper could be pushed back a bit, maybe a couple of months. If inflation isn't that bad, let's say we get a lower number than expected, maybe we taper sooner than expected. So this CPI number could be the most critical of them all, over the past couple of months at least. And on top of that, we have the Fed meeting next week, which is going to be huge in terms of discussing the state of the economy, the labor market, what's going on with bond tapering and so forth, bond purchases, shall I say. So there's a lot going on in the markets right now, guys, and I'm looking out for that number coming out Tuesday morning. So you should be looking out for that, as well as pretty much everybody in the stock market community, whether it's the retail investor like you and I, or the big money, or the hedge fund, whatever. Everybody is looking out for this number. So let me know your thoughts on everything. Drop me a comment down below. And if you guys are enjoying the video thus far, make sure to smash that like button. It really helps me out in the YouTube algorithm. I appreciate all of you guys as always. Now, let's break down some stocks. I have 10 stocks that I want to cover in this video, and some of you guys actually commented a couple of these stocks, and I'm going to cover them for you. And I looked at them before the video. A lot of these setups look pretty good, and if you guys want me to cover any specific stock, please drop me a comment and I'll get to it. I'll try and get to it. Obviously, I can't cover everybody's stocks, but if you want me to look at them, drop me a comment right now and I'll be more than happy to do so. So we have a couple earnings reports coming up this week. Number one is Oracle, ticker symbol ORCL, and this stock has been crushing it. I mean, it was $59 back in January. It just hit an all-time high of $91. This was back in the middle of August, so a little bit, actually just about a month ago, a little bit less than a month ago. And you guys can see, I mean, it's been consolidating for about 2 months, even though we hit that all-time high. Oracle has been trading within 85 as support roughly, and 92 bucks as resistance. So a little 5, 6, 7 point range is where we've been trading. And you guys can see we've also been uptrending. You know, we hit 76 bucks back in June. We hit 77 back in early July. We just hit another higher low recently at about 88. Now we're pushing back up to 90, trading above both moving averages here on the 4-hour chart. So this to me, and you guys could easily see it, is an ascending triangle. Again, clear resistance at about 90, 92 bucks per share, but we're uptrending into that resistance, riding the moving averages and squeezing deeper and deeper into the triangle. So this is setting up for potential breakout with earnings coming up here on the 13th being tomorrow, and that's after market hours. This could be breaking out sooner rather than later. And of course, it depends on the earnings. You know, if they blow out earnings numbers, they crush EPS, revenue, guidance looks great, I would think we're breaking out mid to high 90s, heck, maybe even $100 over the next couple of weeks. But the opposite could occur if earnings are not that great. Guidance is not that great. This stock could be selling off. So I'm going to be watching it tomorrow. I'm not going to get into it. I don't like, for the most part, holding stocks through earnings. I mean, it's not my cup of tea. You guys could obviously do whatever you want, but for me, I don't do that. So for the most part, there's some exceptions, like I talked about with GameStop. I'm still holding on to that, but that's a very tiny position, guys. You know, very tiny. It's speculative at the end of the day, and I'm holding that for a little bit. But with Oracle, a stock that I would take a bigger position in than what I have with GameStop, I'm not willing to hold it through earnings, but we'll see. After earnings, what happens if we end up breaking out, ascending triangle plays out, maybe we could catch a move there. Etsy is another one, ETSY, that I'm personally looking at right now. And as always, guys, please do your own research. Don't just do anything based on this video, my opinion, because again, it's just my opinion. You know, you must always do your own due diligence. So Etsy, ETSY, looks pretty solid here. We're breaking out of the wedge. We have been the past couple of weeks here on the 4-hour chart. We're trading above both moving averages. We're seeing a golden cross. And the past couple of days in particular, well, pretty much 2 weeks, we've struggled at the 220 mark, you know, pretty much ever since the end of August. You know, we've tested 220 many times, but like with Oracle, we've been holding higher lows. You know, the trend's been holding, the uptrend's been holding, we've been riding the moving averages, and this also looks like an ascending triangle. We're squeezing deeper into that triangle. So let's see if you guys can guess it. What's going to happen if this plays out? Etsy's going to see a breakout. Probably up towards, let's see some old levels. 227, that was a sticking point back in April a bit, pretty much all throughout March, April. 227 was a sticking point. So if we break out, that's where we could be headed to. If 227 breaks, 240's next. That's the resistance from February and March a little bit. So needless to say, there's upside here on Etsy. I like it. And I believe this is one of the ones that you guys called out, and shout out to you if you did call this out. I actually really like this setup. So ETSY, watch it. PayPal's another one that I got requested to talk about, which I talk about all the time on my own, but for the subscriber that shouted it out, I'm going to cover it again for you. So PayPal here, we saw a move up to 312 back in the end of July, and since then, after the earnings report, it's been kind of a dead stock. It went from 312 to 265, which was a drop of 15%. It's not too often that you see PayPal, a blue chip stock, get hit 15%. Pretty close to a bear market. So it's not that often. Well, now that I'm looking at the chart, it literally happened. Actually, wow, it did. I didn't even realize that. It happened back in February. The stock went from 308 to 223. That was a 27% drop. But you don't really see it much, let's be honest. And we got some news recently that they're coming out with their own stock brokerage platform. It's called Invest with PayPal or something like that. And that kind of rejuvenated the stock. It shocked it back to life, if you will. And now it's trading back over the moving averages. And the fact that we hit 300 last week, right, that was a great sign for the bulls. Now we're pulling back to 285. This could be a dip, a dip buy rather, especially if we start seeing some stabilization between 280, 285, 290. You know, if this tanks under 280, starts going 270, pushing 260s again, that's a different story. But if we end up rebounding, starting to go back to the high 280s, moving back over the moving averages, now we're talking a rebound close to 300 again, and maybe back up towards that 310, 305 level. And by the looks of it, the inverse head and shoulder is still intact. You know, you have the left shoulder right here, the head, the right shoulder, and now we're just seeing some choppiness. It has to figure itself out. That's what happens sometimes, guys. So keep your eyes out on that right shoulder on PayPal here on the 180-day 4-hour chart. JKS is another one that I'm looking at. Jinko Solar, which I'll be the first to tell you, this chart looks like crap. I mean, it's trading under both moving averages. It's downtrending. We had an awful day on Friday. It went down 4%, but earnings are coming up. So I want to keep my eyes on it because this one, it's a quick mover. You know, last time they reported earnings, the stock went from $37 to $57. That's a big move, guys. Very big move. And let me tell you, that was just in a couple of days. You guys can see from 37 to 57 bucks. That's a 40% move, and it actually went up even higher. It went to $63 after that, after it pulled back a bit from that initial rally to 57. And from where was it? 37 to 63. That was a 45% move to the upside. So with Jinko Solar reporting in the next couple of days here on the 15th, let me see, is it after? Yeah, it says, actually, no, it's pre-market. Wow, okay, pre-market. That is on Wednesday. I'm going to be watching it, guys. You know, if they completely crap their pants when it comes to earnings, this could be setting up for a good short because you guys see here the 4-hour, it's downtrending, and if you pull up the 3-year chart, it's even worse. It gives you a better perspective. Look at that. You guys see the clear downtrend ever since about a year ago, October 2020. The stock was at 90. Now it's at 47. So it could be filling the gap down here on the 3-hour chart, 3-year chart rather, if they do end up doing poorly with earnings. So keep your eyes out on Jinko Solar. FuelCell is another one. FCEL. I like calling it FuelCell. I don't know why. But this is one that's also been just completely destroyed. I mean, there's no other way to put it. This stock is in the dumpster. It's in the dumpster. It was 30 bucks back in February. Now it's $5. That's horrible, man. It's down 85%. And I don't want to preach to you guys. Of course, you guys can do whatever you want, but you got to be careful with these stocks. You know, these energy stocks, the new energy, solar energy, these, even some of the EV plays, you got to be careful because these can turn on a dime and you could lose a lot of money. So from my perspective, it's the best way to approach it rather is to just put a small amount if you want to have exposure here. You know, if you have a portfolio of 100%, right? 100% is your portfolio. I'd probably put like 2 to 5% in stocks like FuelCell or Jinko Solar or some of the other ones that we're going to talk about in this video. And that's just the way I look at it for risk management purposes. I'm a big believer in just buying the S&P 500 if you're not the best stock picker out there, I would just solely buy the S&P 500 and that's it. I know it's not fun, it's not sexy, I get it, but it's the best. It's proven long term that you do well. But once you get better with stock picking, trading, selling calls, buying calls, selling cash secured puts, whatever you want to do, once you get better at trading, then you can maybe have, instead of all your money in the S&P, maybe you could have 40% in the S&P, 30%, and then pick individual stocks with the other 70, 60%, sell calls with that money, trade with that money, and so forth, if that makes any sense. That's kind of a little side tangent there, but I figured it's worth saying in this video, guys, with these crazy stocks that move up and down like mayhem, or is that even the right word? Like crazy. Let's just put it that way, right? So I think it's not a huge, it's clearly not a huge buy right now, in my opinion. It's not breaking out, but with earnings coming up here on the 14th, so 2 days from now on Tuesday, if we start getting that break above the moving averages, now we're talking maybe a resurgence in FuelCell. So keep your eyes on it. PD is another one that one of you guys shouted out. This is, I'll be the first to tell you, a company that I've never even heard of. Maybe I've been living under a rock. Maybe it's a big company that I should know, but I don't know this company. And one of you guys commented it, which again, thank you for that. And don't forget to drop any stocks you want me to cover down in the comment section. This one's called PagerDuty or PagerDuty. I hope I'm saying that right. And they operate a digital operations management platform in the United States and internationally. And its platform harnesses digital signals from virtually any software-enabled system or device, and it combines it with human response data and orchestrates teams to take the right actions in real time. So interesting little snippet of what the company does there. And I'm not really focusing on this as a long-term play, but I'm looking at it more as a trade. I actually really like the setup here. Let me show you guys what's going on. So all-time highs, or the recent high, which might be an all-time high, here on the 4-hour chart is $58 per share, right? You guys can see that was hit back in February. And now I'm just looking at this. I'm seeing an inverse head and shoulder. Let me show you guys. We got the left shoulder right there. We got the head right here. And then we got the right shoulder forming right here. This is pretty clear cut, clean cut, inverse head and shoulder. And on Friday, and for the past couple of days for that matter, this stock's been selling off. You know, they reported earnings a couple days ago, early September. The stock shot up to 51. Now we sold off a bit, which makes sense. You know, profit taking, it got overbought. It makes sense. Now we're down to 43, 44 bucks, and we're right around the moving averages. And mind you, we're still seeing a golden cross here, so this is still looking bullish, and that's why I'm covering it here. I really like the setup. I think buyers could step in above these, or right around these moving averages, as it's trading above the moving averages, and maybe buyers start pushing it back to 50 bucks, 55, 60 bucks, which at that point in time, the inverse head and shoulder would complete. It would complete right around the high point from mid-February at about $58, $60 per share. So I like the setup. I really do. So keep your eyes out on PD. I'm going to put my alert. I probably should have an alert on this one. Looking at it, it's very volatile. So I'll put one at $45 per share there. And another one I'm looking at, which was also a call out, shout out to you if you're watching this, WKEY. And this one I have no idea about. I mean, it looks very volatile. It went down 6% on Friday, and they're actually an international stock. I believe they're based in Switzerland from what I was reading, and they're a cybersecurity company providing integrated security solutions for the Internet of Things and digital identity ecosystems. Okay, here it says it. In Switzerland, rest of Europe, Middle East, Africa, North America, Asia Pacific, Latin America, pretty much everywhere. I mean, what region did we not mention there? Maybe Australia? I don't know. But yeah, they're a small company. They're a $160 million market cap, which, you know, the bigger YouTubers out there, we're only at 25,000 subscribers, something like that. we can't move a stock like this, nor do I want to. I'm not mentioning this to move the stock. I mean, I'm not doing that crap. But let's say some big YouTuber, 100,000, 500,000, a million. If they start talking about a stock, $100 million market cap, man, they can move it. That's just the world we're living in these days. And that doesn't just happen in stocks. That happens in crypto. I mean, you guys see all these BS coins that come out that the new influencers push in. Oh, buy this, hold this, such BS, guys. And they move those coins. That's just the world we're living in. It's just the reality of things, and you have to be very mindful of that. YouTubers, and I've even been offered this, and it's kind of a side tangent. YouTubers get paid to pitch penny stocks to their audience. I got offered like a couple $1,000 to pitch a 2-cent stock to you guys, but I'm not doing that crap. That's just ridiculous. Like, why would anyone even consider that? First of all, that just ruins trust. It just ruins brand. Like, I don't get it, but it's just the reality of what we're living in. And this stock in particular, and let me tell you this, I'm not saying this stock is manipulated. I'm just talking about in general. Don't get the misconception that WKEY is being manipulated. But it happens in general here with many stocks and coins out there. But this one is selling off a bit. It's holding the uptrend, golden cross on the 4-hour. And it looks like we might be getting buyers stepping in, not now, but at some point this week, right around whether it's $7, $8 per share, that general window right around the moving averages here. So I'm looking at that as we're overall breaking out on WKEY. BNTX is another one that I'm looking at. BioNTech SC, a biotechnology company that develops and commercializes immunotherapies for cancer and other infectious diseases. This is one that looks very good on the chart, although I am noticing a bit of a bearish divergence, RSI is weakening as the stock is moving up. That's actually, no, it's not. No, actually, I'm wrong on that. It's not a bearish divergence. The stock's been weakening as the RSI's been weakening. Anyway, scratch that. The stock's uptrending. It's holding both moving averages, and just this past week, we actually started breaking back over the moving averages, and now we're trading clearly within a wedge. So I want to see what happens here on ticker symbol BNTX. Do we end up breaking out of the wedge? Do we end up taking out, let's say, 375, 380, start pushing 400s again? Or do we see a dump off back to the low 300s, which in that case, I wouldn't touch it. So I'm really just waiting and being patient to see direction on this one. So I'm going to put two alerts. One at let's put it at 325. Mark is at or below 325. And we'll put one at maybe 360. Mark is at or above. So we get both alerts here, both sides of that wedge. We also have C Limited to talk about today, guys. SE, I like this one. The setup looks solid. It's pushed up to an all-time high this past week at 360. Now it's down to about 325. It's starting to push towards that 180 moving average, and it's not a good sign that we tried breaking out of the 50 moving average on the 4-hour chart, and we clearly failed. That's not a good sign. We have a clear red candle under that moving average, and you guys can see on the intraday chart, we had a reverse V-shaped recovery. So what is that? I don't even know. I just made that up. We saw a rally to 337 midday. Then we dumped to 323 at the end of the day. So that's not a good sign. That's telling me that there could be more downside, which I said that's why you should look for the 180 SMA 306. $300, and if it starts getting down there on the 4-hour, I think that is where buyers could potentially step in. So watch out for that. And the last one for today, guys, is 5 below. Do you guys not remember us covering this a couple of weeks ago before the earnings when it was at 215, 220, and I was telling you guys, watch out for 5 below after earnings. If it starts dipping down under 200, 195, it could be going 175, 180, and now, lo and behold, that is where we're trading. So I think 5 below, with 185, 180 being support the past couple of months after a big sell-off of 25%. It's in a bear market, and the earnings weren't that bad. I think buyers could hopefully start stepping in here, maybe pushing it back up to 195, 200, and we'll go from there. 200 being a big resistance. We have to see if it breaks out of there. If it does, which was resistance all from January to the end of July, if it breaks out of there, now we might be pushing 205, 210, 215, 220, but we got to get to 200 first. So what do you guys think? I'm going to wrap it up there. Let me know your thoughts in the comments. Make sure to smash the like button if you guys did find value. Subscribe to the channel as well. Hit that notification bell. I really appreciate each and every one of you for being here. And check out my Patreon if you want all my real-time buys, sells, call-outs, morning update videos, private Discord access, and more access to me throughout the day. All of that's on Patreon, link down below, or you guys can go to StasserFest.com/Patreon. Make sure to also get your $50 from M1 Finance. Well, now it's not 50, it's $30 now. Get your $30. I forgot about that. $30 from M1 Finance, your 2 stocks from Webull up to $1,600. Link down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Peace out, guys.